And I start with the narrative of a debt-based collapse. And this is accelerating, and we are at a parabolic point at this juncture. And inflation is a strategy. They're actively going to create inflation because they need the debt debasement and the fiat debasement. It is how they impoverish you, because in real terms, your wages will be going chronically down. Things will be getting more expensive. So basically, you have a parasitic society that is actually destroying the finances of each nation state so that they can roll you into a Bolshevik technological communism. About your mortgage rates and the housing collapse that will be associated with that. This is going to be contagion, but don't worry, BlackRock will have a bottomless overdraft ready to buy all those properties at the bottom of the market when the rates are at their highest, so that you can be turned into a tenant in your own home. It gets squeezed everywhere that it hurt, and at that point you'll probably relent to anything just for the pain to end. You need to be that robust that you aren't forced out in a collapsing crypto market, which will be a temporary collapse before a substantial shoot. You're going to have to hold your breath and see your way through it to get out on the other side.
Welcome back, ladies and gentlemen, to the All in Crypto podcast. I am your host, Rupert, and today I am delighted to be bringing the man, the myth, and the legend, Mr. Francis Hunt, back on the show. Francis, how are you?
Glad to be back with you, Rupert. Thanks for having us on.
The pleasure's all mine. One reason, you're one of the few people who I watch religiously. I pay attention to what you're saying. And I think the reason being is because there's many reasons, one of which is your understanding of the world on a kind of global scale and how it all relates to markets. You know, you've sort of termed yourself a 360 analyzer as it relates to the markets and the world around them. And I think this is really where I want to preface this conversation, is with your take on the big picture of what's happening on a global scale with markets. That's a loaded question. We can get into various elements of what's taking place, whether that's kind of debt crises that you see coming in the likes of the UK, and whether that's what's happening with gold. And of course, we will link all of this to the crypto space. So what's your big picture right now, Francis, with the markets and the world around them?
Thank you for the kind compliments, first of all. Yes, so our take broadly. And the key thing about whenever you are setting out a template, Rupert, is to be prepared to adjust it as you move along and to pivot on views chronically if you're incorrect. We've had to occasionally on movements in a market occasionally do 180s. In terms of our overall macro position, which I think is the start point of your question, there's unfortunately very little adjustment, which sounds a bit, I don't want to sound arrogant, but it sounds pretty much in line. Everything has advanced as per our previous discussions that you and I have had, right from our very first interview all the way through. And I start with the narrative of a debt-based collapse. And this is accelerating, and we are at a parabolic point at this juncture. In fact, the FT is now starting to talk. I was reading an article today, which was an untouchable territory, about the loss of control over the long ends and how central banks are now going to face this fiscal dominance story. I don't know how they get fiscal dominance as a strap line. The truth of the matter is it's a debt-based collapse. The United Kingdom is overborrowed. It can't balance its books. It's overspent. All forms of government over expenditure to revenue through tax incomes is inflationary and builds further debt and makes the tertiary extractors that are the holders of that debt very, very rich. And interest payments, both in the UK, America, and coming for Europe and Canada, Australia, New Zealand, are all getting to very, very high levels of the overall allocation of income. So you are now, the citizens are now directly paying tax so that that money can be paid over in an interest payment, a large part thereof, to a cartel of central bankers and legacy families that were given an exorbitant privilege of borrowing your money into existence instead of government issue. So basically, you have a parasitic society that is actually destroying the finances of each nation state so that they can roll you into a Bolshevik technological communism where there will be a two-class society. That has been our view and continues to be our view. Everyone who thought Elon was a friend now faces zero hedge articles admitting that he's going to back Vance next, who's, of course, the apprentice under Peter Thiel, who, of course, was a partner with Musk in PayPal. And as we were saying just pre-discussion, nobody gets cooperation out of banks for a payment system such as PayPal did when it started a few decades ago, unless you are cleared at a Mossad banker, CIA level to get that network up and running and to build that wealth in the first place. And those same Rockefeller, Rothschild frontmen are being rolled into all other forms of nefarious roles. Don't forget, Elon is interneting the world with satellites at the same time as Thiel and Karp. What a miserable man that is. All of them, in fact, are busy ensuring biometrics are coming in. They are syncing all databases and essentially getting all government data on all citizens in a quasi-private corporation, which all the senators under their ADL APAC handlers are being nefariously made wealthy based on front-running the awarding of future government contracts to the same Palantir BlackRock. So this is a cacocracy. It is a system of capture, and it's quite clear who's doing the capture. Unless you don't want to do it, you lack the testicles to actually call them out. So there's a lot of cowards that talk about divorce and other people and try misdirect. There's all forms of controlled opposition. And I cut like a scalpel through their BS straight to the fact of how the world is going and where it's being directed, and the role crypto will play in all of this, which is part of where you come in. So I don't know if that sets the store for you and gives you a little opening flavor, but everything I see continues to be endorsed that the view is correct, and we are walking this way to totalitarian, Bolshevik-based technological communism with restricted freedom of movement, UBI as an eventuality post the destruction that is almost assured. It's a mathematical certainty. So people should be preparing. And hey, it's not a positive message. Everybody's, we've been sold on positivity culture where everything must be awesome and it's the only way to win is being positive. No, you have to understand how serious the situation is so that you know how deep you actually have to plan, and how low you should set your expectations so that you can still stay in a good mental state when the shock and awe of a collapsing Western society is thrown down on you. And there will be lots of misdirects, wars, or lockdowns, or various other trickery that will be going on behind all the financial collapses to keep you confused. I refuse to be confused, bewildered, and left in a hall of smoke and mirrors. I intend to understand exactly what's going on and to be as best prepared for that. And our community is based on building wealth in the opportunities, actually, because you don't get crisis without opportunities. Think of that Chinese letter that means both crisis and opportunity. And the preservation of that wealth and securing as much freedoms as we can, given that this is our chosen life. We chose our parents, as I've been saying. We chose to be born this era. We forget our mission and our journey, and that we are connected right the way out the top of our heads to the infinite intelligence of the universal subconscious mind, and that we should draw on that power and recognize we are a human for a very short period having an experience, and we should maximize, add value, be kind, and live on a principle basis in a world where principles and truth are likely to be inverted and revolutionary acts.
Wow. Now that's an opener if ever I've heard one, and it perfectly summarizes everything that you have said previously. We've been having these conversations for a few years now, and you've always continued on the theme, yes, in sort of more a smaller time frame, the need to pivot due to the markets and the world around you on sort of short to mid-term stances is of the utmost importance. That's what we do, right? You have to do that as a market analyzer. Otherwise, you're not analyzing the markets. You have to assess your next move. But that as an overview in regards to the world that we're moving towards being a kind of totalitarian, one world system hasn't changed, and it in every sort of which way seems to be accelerating. And the beautiful thing is, and it's not, we're going to use the word beautiful, even though it's not so beautiful, is that crypto is a perfect piece of that puzzle. It was Chris Larsen, who, of course, was one of the founders of Ripple, that spoke about how crypto was the missing piece to the globalist puzzle. Globalization hasn't worked for a number of reasons. It's worked in certain areas, but as a whole, due to money not being of a global nature, we still run a kind of relay system. With crypto, that gets upgraded. And I think this is a kind of missing piece, or the missing piece, to that world that you've prophesized coming to reality. I want to get your view, certainly technically, on the cryptocurrency space. Before I do that, in regards to the advancement towards this world, you're speaking about debt crises and what you're seeing. Also, what we're seeing in gold is perhaps a telltale sign what could be coming for silver. Maybe we could flesh some of those out before we dive into the crypto space, perhaps starting with what you're seeing with debt debasement acceleration.
Well, I think the footsteps in the sand and the tracking is what we are built our reputation on. That has made outlier calls which no one else has made well before anybody else does, which includes our most significant call for the contagion that we are now facing. And most of the media articles that you're seeing being written up today stem back to the 2020 call that this is the end of a 40-year bond market, which means the funding mechanism for overspending governments has now been deeply, deeply damaged and greatly retarded, and their ability thereby to continue to raise debt is severely damaged, and the pivot into ever higher interest payments, which reduces government's form of real disposable income just to maintain their existing promises and commitments, which they will be reneging on and going into one of our core catchphrases, tax scavenge mode. People need to understand that the tariffs in America is America doing a tax scavenge. On the one hand, it looks like he's maintained tax cuts he'd committed to in 2016. But in actual fact, what he's doing is taxing the American consumer for every imported item they bring in at different rates depending on the country. And the two economic blocks that they continue to have record deficits again, and July was another absolute record deficit, is the EU and the China. Those are the key elephants in the room that America just insufficiently sells items to and overly purchases items. So any American, and they'll be shocked to know, but if they start looking at some of those products, even those they think are American, will have potentially European or Chinese componentry in it that are now going to, as parts in an assembly, go up in cost. And if you look at statistics, last week we had a CPI and everyone said, yes, 99% certain September cut, etc., so low, all the signals wrecked economy. We've been saying it's a wrecked economy long before everyone else. We've already told everybody you were in a recession when you first hit the recession back in 2022 under Yellen. That's before Trump even got in. They lied, they removed the word recession, and they said the employment is so red hot. And of course, as we subsequently found out with annual revisions, monthly revisions, they've taken the better part monthly on average about 58,000 jobs a month out of the non-farm payroll. And then at the end of the year, they came around for a second haircut and took 918,000 jobs out of everything they claimed for that year. And by the way, for March 2025, that's just finished. They've got another 550 to 950. So let's just be clear, roughly from 600,000 to 1 million new other jobs that were alleged to have been formed. So you're in a lies, damn lies, and statistics. And the lies get worse and more extreme the closer you are getting to the collapse, because they need to obscure the absolute fragility of the situation from the populace at large so that you muddle on, keep calm and carry on and muddle on, instead of preparing, which is exactly what I am doing to the corollary. I'm telling you it's worse than you think. I'm telling you to prepare. I'm telling you to understand this so that by knowledge and wisdom and insight, you will not be as devastated by the eventual. Rather than being black-pilled nihilist, I am actually a front-running John the Baptist or Noah that is actually getting you tools and mechanisms to be greater prepared to actually save yourself. So many people get this wrong, and nihilism is a regular critique that I get. But so the PPI came in a lot higher at 0.9 last week on an expected 0.2. Just that's month to month, by the way, so that people understand the numbers. 0.2 times 12 will give you a 2.4%. So everyone, all groovy. The CPI is not too far off target. PPI comes in 0.9. Times that by 12 and you're at 10.8%. So
Wow.
all that's happened is the costs of those tariffs are going into the production. There might be some inventory that can still be sold at the old price, but you never get a PPI lift coming right up so that's the wholesaler's price for manufacture without a subsequent rise in prices. No business is in the charitable foundation of selling $20 bills for $10. The CPI is invariably going to climb quite violently. Yet everybody is hell-bent on the fact that the economy is wrecked and they're going to get cuts. That include YouTube channels that are saying the Fed hasn't seen the weakness and they're missing the signs and they're going to be late. Yes, the weakness. We were saying that before those YouTube channels, but the point is that's what hyper-stagflation is. It's chronic weakness and contraction. You have a two-tier economy. You have one economy that's being starved of capital, small businesses, and you have mega corporates that are being handed out government contracts and at the same time could borrow from banks exceedingly cheap. So inflation is a billionaire enriching tool because they get cheap borrowing with huge money and they buy assets that even that go up just by holding their value in real terms as we get proliferation. Everyone else is wrecked and the cost of living goes up. Hence why I've been talking about the Walmart slip of 5 years ago that the lady found and put the exact same items in the checkout basket, and it's now 134% more expensive. That is 2.34 times, almost 2.5 times that. So think what you bought for $100, you now need $234 in 5 years. Then we look at the gold price where it is now. And 54 years ago, it was moved up to 42.22. If we use that as a base, because they would have moved it then up to the highest they could get because they were enriching the government of the day by doing that. And many people have jumped onto the reval train in terms of gold, which might need a comment if you're interested. But anyway, getting 54 years later at 3,340 odd or 3,350, wherever it is now, by give or take $1 or $2, you actually have admitted that the debasement of the dollar for that period is at 8.4% per annum over those 54 years. So every CPI you have, none of them is close to that compounded. And the most important part is it's absolutely accelerating, as again illustrated by the gold price and the loss of value in the TLT that we called at the end of 2020. So you're having the debt collapse, which is obviously going to lead to the fiat debasement because they're Siamese twins. You borrow money into existence. You don't drown one without drowning the other. And at the same time, gold is doing the exact opposite. So as you go convexity into a collapse on debt, you're getting a parabola of a similar gradient, but exactly opposite in gold. So that's the truth. Gold is truth. And that's where we are. The British debt market you referenced. So let's share a chart
Let's
and
go
bring
ahead.
it from principles to something that I know you'll enjoy. Whoops,
This is
not
all the beautiful thing. Just to jump in there, Francis, whilst you're loading that chart up. This is what resonated with you, certainly for me so much, was just how technical analysis is a key part to understanding this puzzle. Because I mean, if you look at what a chart is, right? What is a chart? It's really a representation of human behavior via price action. So you can see the very things that we're talking about manifest in a kind of physical form via a price chart. And there's a lot of different things going on here, which is why I think some people are bewildered to understanding this big picture as a whole. But what you need to understand is we are in a fiat proliferation debt-based system, and the acceleration of that is evident and being masked and is only accelerating, which is impoverishing you at a time when taxation is increasing to sort of cover that planned interest rate payment acceleration up. I love your take on tariffs. Tariffs is a tax on America, not just the other individuals. And we've obviously got that coming for us in the UK. So there's a kind of a multi-pronged approach to actually impoverishing normal people. And through listening to people like yourself and understanding markets, you can actually arbitrage that. And that's kind of what this is all about. But anyway, back to the point on the debt markets.
Yes. And most of what you say there is 100% true. And the UK is going to get their own form of increased taxation, which will be more direct taxation. Trump's very cleverly masked this as, we're going to punish China, here's a tariff. Well, what he's actually saying is, we're going to punish our own consumers for purchasing Chinese goods. It doesn't, long run, you're not going to resource everything that comes from China in America. There's already been friendshoring. In the UK, they're going direct for the property market above 500,000. Now, the pound has been devaluing immensely, and they're saying they're discussing a 24% tax on capital gains on primary residence. If you stayed and this was your primary residence, you never faced capital gains tax. Yep. So this is further tax scavenge mode. So what this means is they're going to take from you and impoverish you so that they can pay the banking cartels increased interest rate on the privilege that they were given borrowing your money into existence. Just think about that.
And impoverishing you in doing so. Yeah, because your wage, your value is losing money. So you are literally getting attacked by multiple. And this is why this stuff is so important to understand. It's not worth living on your knees. If you want to do so, by all means, stand up, understand this stuff, and face it, and actually do something about it, which I know is what you're all about. And we're going to get into technically how all of this is playing out, you know?
And inflation is a strategy. It's not an accident that they don't have control over. They're actively going to create inflation because they need the debt debasement and the fiat debasement. It is how they impoverish you, because in real terms, your wages will be going chronically down. Things will be getting more expensive, in much the same way as Mike Maloney's store manager dad actually had a stay-at-home mum and had 2 cars and a house, all paid, and a proper pension. Now you have 2 incomes and you don't come out. And the taxes here, there, and everywhere on everything, right the way through death taxes, inheritance taxes, property taxes, capital gains on primary residence. And soon, as we've suggested, because they've flown the thought balloon of unrealized capital gains taxes, which is the perfect theft, because then they can actually say, they can force you to sell your gold on the basis that it's gone up immensely in value, when in actual fact, it's just been the fiat debasement that they've used. And that's the court case that needs to be won. No capital gains that has happened outside of real terms on fiat debasement should ever be paid, because that is inherently the current mechanism of ensuring they drag you into ever higher tax bands on the basis of their own policies of debasing fiat. So to me, a capital gains has only occurred if, next to the debasement of fiat, you have in real terms an upside. I will still question whether the government is entitled to any of that either. But you might be able to argue that on Bitcoin, for example, since its existence, you would certainly have beaten the inflation rate, and that the bit above that is a capital gains for sure. And there'll be other things like gold recently that has done the same. But in general, no. But that's their big technique. So this was the collapse that, as I say, from here, because of inverted HVF strategy, first in the new trend, we called short. We even called the bounce aerial for a neckline. The shoulder was a bit bigger than we thought it was, but then it re-triggered again here. And this is long-term debt deval, which you're sitting on a grind line at the moment, real low at low volatility. So outside of a demand-destroying event, which is very disinflationary, you're going to battle to get a bid into debt. At some point, they might do that. But longer term, we see debt continuing to lose value. Reference to the British and the United Kingdom, this is a breakout of an HVF. You'll recognize as a community member and a student of HVF method that this triggered over here just recently on the Friday last. So there's a real scramble. We made our first interim, we pull back towards the funnel and reassert. These rates are going higher to 5.86. That's on the 40. By the way, I think it might be on the 20 or the 30 that I have a real macro 7% run
Wow.
draw that I need to find on a bigger time frame. But this is not going to stop just at that one level. I have to see which one it was. I can't even recall. It might have been the 20-year. Let me just see if that's the one. But we have setups across a number of time frames. This is the one now. So let's just bring that over. We have setups across a number of time frames that are pointing to significantly higher rates. There's your 7.57 on the 20-year. Again, you'll recognize the structures having done our program, Rupert. Squeezy, Japanese, as we like to say, volatility squeeze, the break and feign back in. Then the first interim run, you've been in a containment area here for a while. We call it a bit of a stall box, where the first interim has been the high end of the range initially, but now the lows are being squeezed higher. At the end, we expect that to run through 7.57. Now, think about your mortgage rates and the housing collapse that will be associated with that. This is going to be contagion, but don't worry. Blackstone, BlackRock will have a bottomless overdraft ready to buy all those properties at the bottom of the market when the rates are at their highest, so that you can be turned into a tenant in your own home. So that you can look forward to. And probably with it, tokenization, when they become mass buyers, they already are mass buyers of property. In fact, Fink has met with Starmer. Many don't know this. But they are all, and as we were discussing before, seeing as we're talking, I've just brought up Fink, you mentioned the World Economic Forum and how you've got a CEO in an American listed asset manager who's now turned in to be interim leader and CEO of some quango that runs mainly out of Switzerland, that is throwing out thought papers, you will own nothing and be happy. And many other draconian things that seem to echo and cooperate with the World Health Organization, who you will remember that used brute force to see people lose jobs for refusing to take new medical interventions into their bloodstream. So I always say, forget about a politician as a UK government person and a CEO of an American corp, or Elon Musk as this mass entrepreneur with, I don't know, 9, 10, 15 corporations he's allegedly all running. These are all front men. These are all actors that have been put there, given bottomless overdrafts, like Bezos, like Zuck, like everybody else. Forget the Californian garage that created all these unicorns. If they have to come out of Beijing in the future, believe you me, they will. There's nothing magical in the water there. These are all people that have been selected for this project of delivering totalitarianism, communism. So that's where we are. This is a debt-based collapse. The interest rates will be going higher. That 20-year on balance of probabilities will go through 7.57. By the way, when you think of the bankers' margins on top of that, forget that you're going to get 7.57 if you need a 20-year mortgage on a ex-council home in some rundown area. You won't. Also, the debt product that is created out of borrowing is no longer sought to be held, because banks are stuffed with government product, much the same as collateral, that is all due to the financial repression era that we are in, debasement. So the very, very high inflation and the very high stagnation gives us our phrase of hyper stagflation. It's not quite the same as hyperinflation, like Zimbabwe, where you get a few 100%. I don't think you'll go quite that deep, but you're going to have double digits at the same time as chronic loss of capital to the main street. And we're going to be starved, we're going to be lagged, and we're going to be debased, and it's going to run for decades, probably. And in that time, they are going to put another loop around the torso, squeeze a little bit harder, and start dislocating their jaw for their whole consumption of the rest of the populace. So that's kind of where we are on quite a reset manner.
Yeah.
But that drives crypto. Debt debasement drives crypto and gold.
This is where I want to go now, because the picture that we painted, I mean, people see it, certainly here in the UK, they see things that are happening socially that are herding us towards this kind of future. What we're showing is the financial apparatus that moves us into that manner and ultimately drives everything towards that vision of the future that's very much been prophesized, not just by us, by men in higher places, but also by yourself. And so we're looking at the financial footprints of all this taking place. Socially, people feel it in whatever country they're in. Certainly Europe. Many countries in Europe. I watched a video of somebody walking the streets of Frankfurt. I was shocked that Frankfurt has turned out like that. But then I'm not that shocked going around some of the streets here in the United Kingdom. The interesting thing with the picture that we painted, it's quite doom and gloom. Again, you want to see it as the reality and that you want to stand up and live on your feet, not your knees. How the hell does crypto do well and assets, would you say, do well? So we talk about things like the S&P under the context of everything going on right now. It's just continued to go higher and higher and higher. Now, that's obviously, yeah, in regards to inflation or in regards to money creation, it's relative. How can we paint a bullish picture on the markets generally, risk markets generally, under all of this context? Certainly the cryptocurrency markets, which look primed for upside based on what we're seeing towards more risky crypto assets with the likes of BTC dominance rolling, ETH BTC. Let's perhaps, that's our big overview of the world we're heading towards. How can we factor in a bullish narrative to crypto here? This is where people get confused because this seems doom and gloom. How can we be bullish?
Yeah, so you've got to remember that while crashing an old system, they need to inflate for the first time to a whole new scale. That beach ball in the corner of the room to the Jupiter of the legacy system that is imploding on itself. But within that, the last thing they want is wealth and enrichment for Joe Soap, man in the street. So they are going to bring the contagion and collapse in all the spheres where you exist and your wealth is held to make it very difficult for you to participate in the inflation to the full scale needed in the beach ball. You need to be in the beach ball and expand it up. You will grow immensely by wealth. They are going to not want you to be part on any meaningful degree in that because they need you as a UBI welfare serf that ensures that you take all the shots that you should take, medical, other forms of performance, social scoring, etc., etc. The minute you have a bit of wealth, you can buy yourself the VIP queue on planes, trains, automobiles, and stuff, and they don't want too many of that outside of their insider cooperative cartel in this grand conspiracy, basically. So what you've got to recognize is that your game is not to be crushed so that you are still sufficiently liquid and participating in the high side of that which is yet to come. So this is why we've always stated and used the phrase of a demand-destroying event. The likelihood is that comes in first before we get too much of the most meaningful part of the alt run. And if I just go back to sharing you a chart, and we were early on this and got the call wrong when we called it here. And we got it, I think, wrong one more time as well. I think we were twice early, but I'm conviction now. Eventually it had to happen. So we sound like the clock that called 9 o'clock until it was 9 o'clock. But the third time is a charm. This is a breakout of a falling wedge in BTC dominance. And the biggest part of this that was actually catching us is the underperformance of Ethereum. We got XRP move. You may recall that, and we had a spike up. We got a number of things, but there was a massive short situation. I still don't understand the full dynamics of that. I'm not even sure I care or need to, but Ethereum wasn't running. And it was the largest market cap. And to turn Bitcoin dominance, you need the big caps to move. It doesn't help that XYZ 597 token does a 20x. It's not taking much away from Bitcoin in terms of scale. So this is now turned with the bullishness of Ethereum slowly coming to bear, which is not to say that there aren't other alts running. And in fact, there will be certain alts that will run quite a bit faster than Ethereum, although I expect Ethereum during this window to do rather well and to probably be slightly more stable in these pullback periods. So it's not necessarily a bad collateral place for the people that do occasional light leverage trading with method. Many of those, if you don't have skills, you're probably more likely to do damage. Let me just warn. And that's where we come in. Our link on our YouTube channel, people can check us out, as you know. But this is a key reversal here. And I would imagine that I'm understating this prediction with the black lines. We have a tool that I'm utilizing here, and I actually see that when we do get going, we'll probably get into the 40s up top here. Potentially, and then possibly the next cycle, all part of the same move. I see Bitcoin becoming a far lesser market cap in some way. Whether it survives or not, I don't know. But assuming it survives, that there's nothing untowards that happens to it, I see the likes of the alt class, which is the actual system of your new world order tokenized money, being far larger. So for long-term net gains, despite Bitcoin having done very well during this period, let's just call it, since the bottom are at 15K, this is the inverted dominance, by the way. For many people that might have been confused, I should have made that very clear. Sorry. So I invert the dominance to see the charts upside down as well as the right way around. That's an inversion. So
there
this
is
Bitcoin
theory
dominance going
behind
down.
that. There is theory behind why we invert. Obviously, you teach that within the community. You know, people have biases, and you know we're all kind of, or I'm certainly leaned. I've learned that to a bullish bias. So it helps us looking at, you know, upside. Some people get it far more easily than they do looking for downside. But yeah, just to
Some
throw that
people
in.
can only see things upside. They can't see the crash. So I'm actually showing our take on that. We think this will turn out into a big, on a longer, it might take the next cycle, although I'll also argue the cycle is diminishing. We're more on a business cycle and macroeconomic cycle now than a halvening cycle, in my view, on account of the fact that the supply is becoming ever more menial. But we see this potentially, which would be a very big version of that. And then that breakout is what will drive you. So we might just be in the up leg to here this time, and there might even be an easing and a bit of Bitcoin dominance coming back, but not back to these levels.
So
in other words, you're saying it's the last time you're at 66,000, 64,000. That's turn. You will never see that percentage of Bitcoin dominance again. So that's quite a brave call. And that this move is the beginning of higher highs and higher lows for alt dominance over Bitcoin. So it's played its role. Bear in mind what's happening. Debt-based crisis. What do you need in a debt-based crisis? Well, it was positioned as a reserve asset. You need alternative reserve assets. Who is the primary legacy reserve asset? Gold. Gold's run. Who is the digital gold if you're pushing the digital money and gold system? Bitcoin. Bitcoin's been dominant. It makes sense in terms of the time. Once that debt-based crisis has played out, it's all about what's the new system, what's the new rails. And that's where Link, Ethereum, HBAR, XRP, XLM, those guys start to be of far greater news. And I want to highlight a point, and we've said this from the beginning. You've seen a clustering of US mega caps. So Palantir has now made the S&P 500. They pushed it in there. So now BlackRock ETFs, Vanguard, State Street have to buy Palantir because it's now in the top 500. The top 10 stocks actually are 40% of the stock market. It's unheralded. They're all unicorns. They're all the surveillance status stocks. They're all the surveillance status from Amazon and all of them. They're all part of the military industrial complex or the surveillance industrial complex in some way. And in the same way, the tokens, which is why we've always focused on those that are blessed with great investment, in the same way, the top 25 and very specifically the top 10 are probably your most dominant status tokens and include all the ones you probably should be investing. So outside of maybe Chainlink, which is just outside, maybe one or two others in between, up to 15, you probably got all your key winners, and it will crowd out and get the most gains because it will be institutional money that moves the needle, not you, retail dude. And as a result of institutional money, which is the dark state money, which is coming out of debt and collapsing the Ponzi, that is the real Jupiter implosion fuel. If you want to catch the ride, you need to hold your nose, grab the status tokens that are going to be delivering all the amazing new advancements that we'll all have the privilege of participating in while all our data is being scraped and all the rules are being layered down on top of us.
So you can see a hell of a lot going on here. This is why I wanted to preface everything with a kind of big picture, because crypto fits into that big picture perfectly. You know, when we talk about the kind of debt system and the velocity in regards to debasement that's going on there and all the things that come with that, Crypto was introduced literally 2008 when we had that first financial crisis. It's been perfectly positioned from the start to be the new rails upon which a new system is built. And when you look at that Bitcoin dominance chart, this is why I love technical analysis. It gives you that green light in regards to what could play out technically that fulfills that fundamental story. What we're seeing is continued, you're talking about debt debasement, higher yields. Well, what's an alternative to that? Bitcoin. That's where you get that run. Then a potential, you could call it another Bretton Woods moment, where they kind of switcheroo the kind of underlying thing that backs the global system, or maybe they introduce more things to it, which crypto can enable. That's why it hasn't been done thus far. Then you get these other altcoins that are actually going to enable this new system really starting to take over as far as dominance is concerned. You can see the technical story matches fundamentally what's going on macroeconomically, and this is again why we love having you on. Your understanding of the global macro is really second to none, and this is stuff that is directly impacting people's lives.
You've actually been in a managed agenda process from the generations before you. Don't even blame your parents. Don't blame your parents' parents. They've been pulling this stuff since the French Revolution and before. So, that's the way of the world. Rothschild is a front runner. It was the Battle of Waterloo that he got the message before, and then feigned one way and then went the other way, and then got to own the Bank of England as a result of crashing the debt and then buying it all up on the announcement that followed later that the British had won. So, these guys are manipulators. That's who they are. They're scoundrels, crooks, and they believe they're a ruling class of bloodlines. And that's where we are. So now you have to accept that and move on. And how do you deal with it? You recognize the agenda they're going, and unfortunately, you're not setting that agenda, but at least you can make sure you're not impoverished by it. And that's part of our pragmatic positioning.
I love that approach. Just to jump in there, Francis, I love that. If anything, you've actually got more advantages today than you had back then with things like the internet and stuff like that. At least you have the knowledge now of all of this stuff. You're not just sort of swept up in it. I think, again, with Bitcoin dominance doing what we're looking at, the interesting thing there is that's a bullish time, I think, for risk assets generally, right? If altcoins are gaining against Bitcoin, that's got to be a sort of a good time for markets. Generally, obviously, on the back end of debasement, things like there's a number of things that are going to go into that. Where does, in regards to Bitcoin dominance going to where, you and I believe it's going to go, where does a demand destructive event fit into all of that? I think where people get confused is we're talking about...
Yes. So what could actually happen is we have regularly, there could be a flippening of outcome. Regularly, when the macro crashes, well, first of all, let's go right to the very beginning. 09, 10, it didn't matter if the stock market was up or down, crypto was largely growing.
Yes.
Subject to its technological advance. It was its own separate bubble. We warned that will change. The minute it starts scaling and it needs more money and more retail, it will be more affected by the business cycle. I remember talking like that in 2016, and we started to see that. If you had, then you got everybody else who was stuck in crypto having to learn all we had learned about traditional markets, and now talking, it's correlated to the NASDAQ. They all flipped it to that. It's not quite either that, but it has had shown some risk on and risk off characteristics, just with a lot higher beta, which has tended to be tied to M2 supply, money, liquidity, and business cycle. So now we're getting that. Now there can be a pivot that will catch everyone in surprise. You could actually have contagion and collapse in the traditional world. And whilst initially you might get shaken out, remember, they don't want you to be in. And we teach this in technical sense, and this from our course with the look one way, go the other way candle just before a major move. In fact, we had that on platinum, and I was shaken out of a very good weekly HVF and had to get back in because it really got surged. It even ran technical stops, which is quite typical. But you have to be really belligerent, and you have to be a long-term in the market to say, no, I'm right about this. I'm getting back in. That's the classic shakeout. And it started to reverse, get back in. And then we rode the big move to its second interim that it's now had. It's now slowing down. So I'm giving a traditional market example. You should expect something similar. Initially, an absolute blood in the street moment, because remember, they don't want you in.
Yep.
So if they steal all your money in the bank, they remove all your equities through a great taking, they squeeze the food supply chain, which they've already had the likes of Bill Gates, Zuckerberg, Bezos buying farmland all over the place, including BlackRock in UK, US, Western world, all of this. It's very easy to screw with supply chains. They're paying British farmers to exit the market well above what they're truly earning in the market. All forms of skullduggery. If I squeeze your food supply, I squeeze everything. I bring about real shortages. I remove your income, and you're a hodler in crypto, and I crash the crypto market, many people will be forced to sell out at the bottom. That is going to be your big test. This is what I'm preparing for you. This is probably the most important thing I'm saying to you in this interview for all the people watching. I really would like you not to lose out. I am sincere and integrity-based person,
Yep.
principle-based person. I'm telling you something really important now. Listen up. You're going to get squeezed everywhere that it hurts. It's like you're wholesale being beaten up and kicked in the testicles by 5 different Brazilian jiu-jitsu champions. And at that point, you'll probably relent to anything just for the pain to end. You need to be that robust that you aren't forced out in a collapsing crypto market, which will be a temporary collapse before a substantial shoot as the insiders, Nancy Pelosi, indicator and everything else that has somehow become worth $500 million,
Yep.
that couple along with her husband, and will be putting all their money and getting into the last gasp train on the altcoin market after a flush out to the downside brought about by Main Street macro contagion and collapse that will probably hit you where it hurts. Your interest rates will spike on your house payments. Everything will happen at once. Your wife will say, why aren't we selling the crypto? Or if
Yes,
you're a
of course.
lady watching this, your husband will be saying it. I'm not picking on girls here. And it sounds like the most obvious thing to do just to get through the next day. You're going to have to hold your breath and see your way through it to get out on the other side. It is the flush out, and the flush out will be brutal, and they will hit you in every pain point simultaneously in a shock and awe attack that will feel like you're being mugged simultaneously by 9 men with batons. Okay. And this is really important that you survive that, because the intention is never to build your wealth. They will never let you have your own money. Hear me now. And their intention is, as Marxism, totalitarian surveillance Marxism, is to strip you out so that you become subservient to state. That's what they want. That's what Marxists always want. That's what they did in Bolshevism. If you're middle class, they need to throw you off your land and burn your farm and kill the supply chain. Why would someone do it? They are inherently destroyers. That's how they seize great control. Self-reliance is an enemy to them. They must remove. This is such an important statement. And if you hear anything from this interview, you must understand and prepare for the test of the ages to be able to make it out on the other side. And then expect the capital gains tax, unrealized capital gains, and all other things, which is why we have entities, jurisdictions, and many other things to not only help you build wealth in this situation, but to retain your wealth and secure optionality and freedom in these times. This is so important. You need our services, and you need to be alert to this attack vector that's coming for you.
Obviously, Francis mentioning services there. We'll leave links to all of that in the description. We'll touch on it a little bit later on in regards to some of what you offer and some of what's currently taking place. I think I wanted to clear that up because a lot of people get confused. They hear you talking about a positive time for the cryptocurrency space, but also being alertive to a demand destructive event. One, like you've just suggested, and it kind of, some people see that at odds, but actually it's part of it. And I think clearing that up, I think, is absolutely vital. Let's pivot back into crypto in regards to the more short time frames. You know, we're looking at BTC dominance. There's other charts that you've addressed, such as ETH BTC, which is essentially a similar thing to BTC dominance. And then maybe we'll look at, if you are okay to do so, some of the altcoins that you're paying attention to. XRP, I've got to admit, when XRP was 40 cents, it was what you were looking at technically that kind of made me think, it's time to start paying attention. And since that, I think it's 450% up for us. So again, this stuff works. We hear people saying this is a...
I'll also highlight, Rupert, The 336 as a localized high is a very good call that we're
We can
still,
get
I
into it.
believe, below. So it's not only about, because in the meantime, other things have now run. That depends how active you really want to be. We are not hyperactive. It was XRP, XRP, same theme, same theme,
Yep.
same theme. Localized high call at 336, now elsewhere. And that's been one of the key drivers there has been Ethereum, not immediately after XRP, but Ethereum. Ethereum's come up quite a long way, and Link as examples. But let's do what you asked for, because I think you asked for
Sure.
the FBTC chart, and it's a
BTC,
very interesting one. It's had a little bit of a pullback spell. After making this little target over here, which we loved, you had a blow off. This is a broadening structure. There's this legacy funnel setup that is quite interesting, and you're sitting in it, and that's a hammer. So I would argue there's quite a good
and
chance.
a broadening structure, because
It's continuation.
continuation. Yeah.
We call that a slide. It's not quite a megaphone. It's got a bit too long for a megaphone. You've retraced maybe a bit much of the original pole. So that's the pole from the low. It's probably become a little bit broader. It's not huge broadening. It's kind of got a little bit of broadening. Some people might draw it that they might get a flag out of it. But it's a channel to the downside. We think it's got a bit of a broadening. That is a potentially bottom bullish 4 hourly, and that's one of our favorite time frames on crypto, by the way. 4 hours hammer that is sitting in a legacy funnel that found support on those lines. And that, by the way, if I take that away, you will see that gives you a neckline. If that hammer is a reversal, that will bring a shoulder up here.
And then you are looking at, you've got multiple technical signals pointing at a reversal. That's
correct. That's what I love about our methodology.
Absolutely.
You get the read on a number of levels, not just one. So this is deemed continuation. This is deemed bull. The BTC dominance is a breakout. We have already showed you that. This is a bull pole flag. You could see when it got a little bit volatile and defensive. Where did it bounce? On our legacy target, by the way, for down there. And then eventually it gave up. You could see the two spinning tops, really low vol. It gave up hard. And since then, we typically expect, that's continuation. That was a megaphone on a selling pole. We expected downside continuation. What did you get? Downside continuation. But now you built a reversal structure in our funnel on a hammer, and we'd point to this and say, you're coming for a break. You might get a bit of a reaction when you come to this level again, but overall, you're going to be going probably back up here. You may balk at the new high and top out and then wind up to go higher, or you might just consistently trade higher. But normally you slow down after a target. So this could just bring you up to that high. So that's kind of how I would look.
The interesting thing, we're looking at confluence in regards to technically what you're expecting, pointing to the upside on the smaller time frames. We've spoken about BTC dominance and how that's bullish for Ethereum. So that's further confluence. You also have bigger targets potentially for Ethereum. I know on a
13,800, yes. And I can show you that's on bigger time frames if you want to do the deep dive on ETH. Absolutely. What I do want to highlight here is the similarity, if we go up to the monthly time frames, between the BTC dominance. Now, I've done a chart on this. And it's become very it's become popular to beat up on ETH. Everyone else is a smarter guy. Ada, Solana, Link, they're all newer, shinier toys. But there's no doubt, and this is again, I forget the technology. There's people that'll talk about the different technologies and who does what. We all know ETH's more expensive than Tron, for example, to move money around, et cetera, and all of those things. But I look at it pragmatically, not technologically. If they've determined this is one of the key players, it will be a key player by decree. Some people say, this coin does this much faster, and they'll be 100% right. But if they've determined that's going to be that, it's the same way. I remember our military industrial complex call at Master Investor in the United Kingdom. We said British Aerospace, BAE, is going to go immensely high up. And he says, oh, that's absolute nonsense. Someone from the back put his hands up. It's terribly run. It's worse than any government, a status, the bureaucracy, they this and that. And I said, they're going to get buried in money. It doesn't matter.
Yep.
BAE is up from that 2014 call about 22 times.
Wow.
as a military industrial. Of course, everything's war, all of that. It doesn't, some things, it doesn't matter. It'll even be like an averagely managed mining company that's just really got a couple of its mines open. If gold goes to 6,000,
It does well.
and they're not particularly brilliant, but they're sitting with proven reserves in the ground and they do it, they're going to get covered in money. Especially if their costs are in Mexico, it's kind of low, or whatever the case may be. So there's situations where you don't even have to be a brilliant executor. Don't get lost in technocracy. Too many people geek out on the tech and fail to see that people have already decided. People decided that Bezos would be Amazon and that he would end up doing the military industrial complex servers along with Microsoft. Maybe he was a great executor, maybe he wasn't. Maybe Gates wasn't a great executor, maybe he wasn't. The point is, they're both running mega monopolies that go unchallenged, never mind Google, Alphabet, and have essentially worked with state in profiling their citizens. So they were chosen,
A similar thing. Yep.
And you have to have the same mentality to this. So this is, again, like the BTC dominance draw I was highlighting, only I will highlight now, if I jump in between the two, you will actually see that ETH is now overperforming where previously it's underperforming. So if I go back to the BTC dominance chart and pull it up, so it sits in roughly the same place, remove some of my noise, you can see that actually being in the next biggest alt is right. Generally, on aggregate, the move turn since the lows is been larger in Ethereum than it has been for the alt category as a whole. Do you see the summary of what I've done there? That move is bigger than the other. And I can measure it for people that think it's just a visual construct.
Meaning that ETH is the performer here. Yeah.
Correct. And that doesn't mean there isn't some altcoin, that number 15, like Chainlink might have gone up more. But the point is the aggregate whole, the odds that you being in the one that's beating ETH is actually not that high. And the liquidity on ETH for leverage trading or buying and getting in, getting out, far better. So you've done, since the turn, ETH has done 123.44%. By the way, it's worth pointing out how it underperformed grossly and went into a violent spill here. While if you look at the BTC dominance, it was more like this. Because XRP was doing okay, it had its surge, XLM got a bit of a similar move, etc., etc. So there's times and there's seasons, and you want to be positioning generally in the correct one. Again, I'll go back to the BTC dominance. There wasn't that same collapse. You collapsed more initially, but then you were quite considered low volatility channel down compared to what happened on Ethereum. Ethereum got a flush out, actually. Everyone gave up on it just before it was time to be in Ethereum. And this is why I say, don't doubt the market caps. You're looking, if you're buying Google and Alphabet 2 decades ago, before it was Alphabet, it was just Google, Apple, and everyone's saying it's really expensive at a market cap of 500 billion. That's unheralded, all of this stuff. Well, wait and see. That's the problem. All of these tokens in the top 10 are all part of them. They've already got their positions. You need to hold on. That's your big challenge at everything that's coming away, including a waterboarding where they're going to test how long you can hold your breath. And that's what I was describing when I said key important point, look into my eyes. So that shows you the relative underperformance of ETH in that crash there, that blue channel that I'd drawn on the FBDC, and now its subsequent overperformance. So it wasn't the place to be until it suddenly was. And that's the value of doing 360-degree analysis across all forms, and also understanding the end goal, which is the reset sniper. The 3 circles in our branding. No one cares about your brand, but they're there for a reason. Methodology, that's the shell. That's the market sniper and HVF method. 360 degrees analysis, key levels of significance, squeezy, volatility preceding, low volatility before high moves. Then there's the crypto sniper, the recognition of its focus and role in the uploading of the new society we are coming in, which we focus on, and then understanding where they're taking you. Start with the end in mind, the reset sniper. And what you've got out of me today is not just crypto. You've got the market sniper, methodology, technical analysis, 360-degree, knowing where they want to go and who's in charge. Reset, crypto, and methodology. That makes a lethal combination, which is why in the middle of all three, you end up a bigger winner and you come out with more gains and you get to keep them because you were pre-warned and prepared for the fullness of what you're going to go through. That's why I'm here. I'm trying to help people. I'm trying to bring wisdom. Are we perfect? No. Are we going to be always right? On the small time frame, medium time frames, often not. On the bigger time frames, are we accurate? Almost 85, 90% to 100% on reset sniper. So that's something to bear in mind. FBTC is in a snapback rally and is going to probably be an outperformer. It's going to probably make an RH3 somewhere up top here. If you throw volume by price and other things that we do, which we go into in greater detail in the sniper circle, you'll see where it's likely even to top out, where you might want to take a little bit off if it gets up around here and rest. You might want to be more on Link, for example, or an other. We have a few others I haven't mentioned here that are super winners. Why are we in those, etc.? So maximize, stay in the game. Generally, we're in investment, which we call blue pot, with rare moments of orange pot and a separate ring-fenced hot pot for shooting for the stars, where you can be aggressive but with common sense. And we tax down from the red to the orange and from the orange to the blue, so that you have an investment base, because it's the sitting and the patience that makes you your big money in the end.
Yeah, absolutely. Francis, we've covered a hell of a lot. There is one coin I want to squeeze out of you, and that is XRP. So Ethereum, you obviously have and I'll refer to Francis' channel if you want to find out the Ethereum. I think it's $15,000 range price prediction, which is supported by everything that we've looked at here. More broadly, what's getting supported by this is broader coverage for the altcoins. A good time for them generally. If the King alt is moving, you can imagine that some of them are going to benefit. Let's talk about XRP. We still have that $19 prediction on XRP.
Yeah.
I mean, in the future, who knows how high it could go? And I know you've spoken or theorized a little bit of that. But let's just focus on your thoughts on XRP for now, because it's a clear win. It's the third biggest cryptocurrency, talking about market caps.
It is, and it's going to be a winner. Look, you may find XLM in percentage terms does a lot more, but in between it also comes down a lot more as well. Sometimes the biggest outright winner is the impossible hold. If I could give you the biggest outright and winner and know and tell you, it might actually be a very difficult hold. It's the best winner is a good one that you manage to stay in and endure the ride and the volatility for. So everyone wants to tell you volatility is a feature. Volatility bites. It's a gift and a biter. So that was our localized high that we literally called 3.36 for XRP, and we've been more neutral since on XRP. So we feel there's a bit of a rest period, but it will in due course. That was the squeezy where we were buying at 60s, 40s, 50s, 60s, 69, and took the pleasure out of that. Since then, it's only gone higher for a short period on a monthly level, didn't close as high. So if I just show you the 3.36 localized high call there, the close was, we've got our numbers back, the high was 3.4, but if you look at the close, it was 3.035. So it was $3.03. So getting out at 336 was a good point. And that was our last major call that we made. Be in here, get out, might be a bit dull. It actually dropped as low as 161 on that hammer, which I think is a flaw. So it's not like we're bearish. Remember, we just say, are you going to be moving fast? Then we want to be in you. This has been largely down and sideways, I think you'll agree. So you will know our kettle drumsticks, which is a little bit of a range finder. You had kind of what looks like a shooting star, but in the wrong place, and a hammer that's in the wrong place. So to me, the 161 is a little bit of a working flaw. However, right now you got sold off from that high back down, and you're on a little bit of an offish. Don't forget, we've done 21 days of August now. So this is turning into a hard candle now. It's not complete, but it's a little bit of a soft. So other things are moving faster. we don't like to sit moribund for too long, but I'm not a day trader. I'm not changing my portfolio on even a week-to-week basis. So we hold a certain amount of collateral, and then we hold medium-term orange pot leverage positions in movers. Right now, XRP is not the mover. Will it give us an opportunity to get back in and base out? You ideally, if you're just an investor, try to see if you can buy in this range. As I've warned, don't use leverage, because if we got a demand destroying event and we got to dip down to $1 in a shock hammer, I'm not saying that's likely or possible, but they could. Remember the flush out. So when the flush out happens, if you don't have stop losses, you don't have methodology, and you have any leverage trade, you will be destroyed. That's a fact. So far better to just be investment and to bite your bottom lip, and make sure you have other money to see you through an extended period, which I can't tell you how long, of crisis in the world and flush out. So be careful, but you could accumulate on an investment basis on that blue box level. Might be a localized low. You could be dipped below in an exceptional event, but in the long run, the target for this is 19.35, as we've drawn before with the HVF tool. So that's our HVF method draw, which gives the 19.35 target. And I think you'll rest a little bit. We haven't yet made our second interim, which is 4.53 over here. I'm hoping that something happens before October, like everyone else, but I think there's still a chance we get a dip before we go up. Remember the washout. Don't be caught by that. So long-term good. Right now, do you need to be in it? I think you can buy it cheaper. It'll ease a little bit, possibly. There'll be other alts moving more.
Okay, Francis, this has been an absolute masterclass in regards to your theory on the way the world's moving towards. We're showing clear evidence that it's moving in that direction. This has been something you've been talking about for a hell of a long time. We've factored crypto into that. We've looked at what's happening on more of an immediate time frame, also more broadly where crypto's going over a broader horizon. This has been a masterclass. And guys, take away from this just how imperative all of this is in regards to your lives. This isn't just stuff that affects me and Francis in the markets. This is things that is going to affect you directly. And we've covered that. Do go and follow Francis. Francis, quickly to wrap things up, where can people find you? Of course, there'll be links to this in the description.
For crypto, the Crypto Sniper. For general markets, which I encourage both, you might think I would say that, but it helps to understand the macro. And I know you appreciate that, Rupert. You've shown real aptitude there. That's the Market Sniper. The same names on X we talk through there. And remember, it's all about real opportunity, but being smart and maximizing that. You've got to build your wealth during this period. You also need to protect your wealth during this period. It's going to be turbulent, volatile, and a lot of attack vectors will be brought down upon you, possibly simultaneously, to cause chaos in your personal finances, and then to secure freedoms for your right to a great existence and lifestyle. It's far better to be a wealthy slave than a UBI serf, and I fear for the masses. This is going to be a polarizing event in wealth, and there will be an elite ruling classes, and then there are going to be the serfs. And I would like you, as much as possible, to survive this event, and not only survive it, but thrive. And that's our primary mission of the Market Sniper and the Crypto Sniper. Thanks for having me on, Rupert.
The pleasure is all mine. Ladies and gentlemen, there are links in the description to where you can find Francis. Do go and check him out. He's somebody I've gained great insight from. That's it from us, guys. We'll see you all in the next podcast.